Hi, it's Darren here. Welcome to a brand new video on trading Forex supply and demand. This is going to be the secret to catching market turning points. So I'm going to complete this presentation that will apply for both the newbie and the advanced trader. So this is how I am using a rule-based way to find my setups and my opportunities. And the reason they're opportunities is because of the reward to risk. And I'm going to go into the whole presentation very shortly. So I'm Tyrone Archer, trading graduate from 2011, done the XLT course, and I've had to come away and develop over the years the study of supply and demand to create what I'm about to show you. Just before I continue though, the content I am giving you is completely free. I'm not trying to sell you a course. I'm not trying to hold back a little bit so that later on is something you need to buy to make this work. Nothing is held back. So just spare a second, if not now, a bit later, to give us a thumbs up, subscribe. And there's my Facebook page if you'd like to go on there, like, share, comment, follow. And I'm going to get straight into the presentation. First of all, I just want to get you to empty your cup so you can fill it with what I'm about to say. And then you can decide at the very end if it's for you or not for you. I look at a trade, any trade, as an opportunity. Okay, and there's a small calculation for that, which is what goes hand in hand for all traders, is a risk-reward ratio plus the win-loss ratio. And what you'll find is if you've got a lower reward to risk ratio, so for example, you're going for a 1-to-1, you'll find your win ratio normally on a good strategy is higher. However, it's the 1% that you're risking. For example, we'll talk about 1% that you're risking to make 5 on average. But if you're only making 1 to risk 1, you need to have a win-loss ratio better than 50% to be profitable. Now, if it's only just above 50%, you're going to have a hell of a lot of trades to actually make a small profit. And sometimes it's better just chucking your money in a Vanguard S&P 500 index fund every month and just forget about it. You know, you're going to make 8 or 10% a year. But if you want to make a lot more, you're going to have to increase that reward to risk ratio. So it doesn't matter how you want to look at it, 1%, 5%, 5 pips, 10 pips. However you look at it, it is about what you're risking to what you're making. Now, the problem is when you're going for a minimum 5-to-1, you're going to find you have a lot more losses. So what this presentation is about is reducing those losses so that you're only trading in the areas where the win-loss ratio is about 40 to 60%, because this is what we're looking for. Sometimes the win-loss ratio can be a little bit lower, but your reward will suddenly be 10-to-1 or 20-to-1. So we can sacrifice a little bit of the win-loss ratio so that we can have a few more losses, but our reward is much, much bigger. Therefore, your account grows at a much greater rate if you're only risking 1% to make 10 or 15 or 20. So minimum 5-to-1. This is for the opportunity. So I look at it as opportunity, and this is the picture. Whether you invert this picture for shorting or you're going long, this is what I'm looking for. An entry in a green line, a stop, and in this case, this would probably be a 10-to-1. The distance between the two, but you get the picture. When I measure out a 5-to-1, I know I've got a trade. Now, to be able to do that, I need to know where my entry is, where my stop is, and where my target. And also, for this to work, the opportunity and this ratio, this calculation to work between the risk reward and the win-loss, you must stick to the plan. You must stick to the rules and not get emotional. So let's start with the very first pattern that I like to look for, the trend pattern. Doesn't mean I'm trading the trend, I'm looking for an opportunity in the pattern. And this to me is an ABE enter scenario, ABE, an ABE scenario. You can call it an A, B, C, D, E for entry. As an example, A, B, B, C, D, E, if you want to do that. But to keep it simple, as I'm drawing the trend line, A, B, enter. And what it is the probability is going to be extremely high, not guaranteed, but extremely high on the first touch. Trend lines can also have a second touch, a third touch. So we can have this first touch here, a second touch, a third touch. They can go on and on and on. It can do that in a very strong market. However, every touch, your probability is being reduced. Overall, we're talking about over years of these patterns. Okay, your probability is, in my opinion, low if you go more than the first touch. So what I want to concentrate is only the first touch, whether we win or lose. Just the first touch of a trend line, this uptrend line. And every time the pattern changes, for example, right this low, you can see we're ranging. We had a low, a higher high, or just a high, a higher low, and then a high. This creates the AB, but we didn't quite retrace to have an entry. So price rallied higher. So therefore we had a new trend line, this being the low, and then the higher low, so A, B, and enter. So this is how I will be drawing my trend lines. And these patterns apply both to your high and your low time frame, whether your big picture, intermediate picture, your lower time frame, and even your entry time frame. You could use these patterns. But this is the first pattern that I want to show you. This is a trend, a directional following pattern. So your probabilities are in your favor. You're going with the market direction, and you're going to take the first highest probability touch after the pattern is drawn. And we're going to how you take those touches and what you're looking for a little bit later. The second one is the trend line break opportunity. And I cannot emphasize this word opportunity. What does opportunity equal? A good reward to risk and a high win-loss ratio, okay? Or the highest. The maximum we can get out of both is what creates an opportunity. The minimum is what sets the rules that I look for an opportunity, which is 5 to 1. So this little box down here, same sort of thing. Stop, entry, target. Minimum, this pattern within any of these patterns is what I'm looking for. So I'm trying to teach this in patterns, not words, not rules, not words, but patterns. The rules are in the patterns. The pattern or the picture paints 1,000 words, and this video paints 1,000,000. So this is the whole pattern and picture all in one that you're looking for, the rules to follow through patterns. So this is exactly the same pattern, but let's just break this down. Demand is below, supply is always above. Now, if the trend line is up or there's been a trend line break, demand is in control. So all these drop-based rallies or even rally-based rallies we're going to see are demand. And if you don't know much about supply and demand, look in the link below. You'll see to my first video, I've got a PDF file with all 3 videos, but the first video will explain the 4 types of supply and demand. So go and have a look at that. I'm not going to go into that in this video. This is more the next step up. So from a newbie who's going to, expand his supply and demand knowledge, watch my first video there in the link below, and then move on to this slide. Right, so let's crack on with this trend line break. And as soon as we've broken this trend line, we have supply. So if I was to apply the opportunity risk reward management, this would have to be 1 pip or 1%, and this would have to be 5 to a target, which is always in the higher time frame as being this solid bodied candles. Now we'll come into candlestick charts later in the real life scenario, and I'll go through trades that have worked from last week and trade setups that we're looking for this week that may well have failed. Remember, it's not about always winning. You can't always win, but you have to keep doing a strategy that in the long run will make you money. And this, to me, becomes harder the bigger this reward gets for traders to follow, which is why 95% of retail traders fail, because they're going for 2 to 1s, 1 to 1s, 3 to 1s. They get emotional in taking their profits off the table. This is a long game. This is a business. In a business, you have to pay out on all your business rates, your stock, your staff. They are losses to the business. As long as the money coming in exceeds the losses, you make money. After taxes, of course. So think of it as a business. You're going to take losses. Learn to take losses, but learn to take them in the correct way and build confidence. So when this has happened, how does this become a bit of an opportunity? If we look to the right, this is how the double tops are formed. And if we invert this to a downtrend, it's how double bottoms are formed. So what I'll be looking for is a double top pattern. So price comes into here, and then I can either short this if I've got a 5-to-1, or wait and look on a smaller time frame for confirmation. It might give me an 8-to-1 to here. Maybe I can reduce the risk. You know, maybe I have a 10-to-1 set and forget. Price doesn't make entry, drops away, and then I get on board for a 5-to-1. There's lots of ways to play this, and I'm going to show you that in a moment. But when supply is in control and we broke a trend line, and we don't have to remove demand to the left here, because I'm looking for an opportunity in here. I'm not looking for this to reverse and drop. I'm not looking for a trend following strategy. There are plenty of one-trick pony strategies out there. I've got them on my YouTube channel. But it's the reward to risk. There's no point risking 100 pips and going for 500 pips. It's a 5-to-1. I might be able to do that in a few hours instead of a few months. So you get the picture there, okay? So anyway, the trend line itself is acting as a supply and demand shift of balance, like a pendulum, like a seesaw, yeah? It's like a scale. That's what I'm interested in, is a combination of the shift of imbalance with the chart patterns. So let's move into the trend line break patterns that I'm looking for. So first of all, pattern number 1, there is no level to lean on. What I mean by that is, again, AB, this would have been an E entry, but it broke, had a loss. We've created this area of supply. So if price pulls back, double top, price didn't make it. There's no level, like a drop, base drop to the left here to lean on. Price retraces and then drops. So I've missed this reversal opportunity. The opportunity here, which was a double top opportunity. I don't want to call it reversal. I want to call it a double top. My target would have been down here, and we'll talk more about that again in the other charts. So, all right, it's moved. There's another opportunity, A, B, if price rallies, and it doesn't necessarily have to rally into this level, but if price rallies and touches a trend line, and there is a smaller time frame supply in this area, then I'm going to look for price to reverse. Maybe I'll have a set and forget. It's a very good level, a fresh and original. Or maybe I will just wait for confirmation on a lower time frame. So if it's a monthly, I might be waiting on a daily, a 240 or 60. If it's a daily, maybe a 60, 15, even a 1 minute. I can use any time frame in these areas I see fit to give me the lowest risk and the highest reward. The closer we are with these trend line touches to whatever demand level is in this area, to being above that demand level with my stop, the better. So the closer we are, the lower the risk and the higher the reward can be. Now we look at pattern number 2. Both supply levels here can be taken. Why? Drop, base, we'll class this as a base where candles just move sideways and then drop. I can trade pullbacks to this level or this level. Why? Because this is the double top and this could be the right shoulder, but I've got a level to lean on this higher time frame. Notice it's the higher time frame, drop, base, drop, the pattern time frame that I'm looking for the opportunity. If price rallies and reverses from this level, so in this area right here with my stop above, gives me the lowest risk for the highest reward for my target here. This gives me a risk of this amount for a target down here, which might be the same as here, a 5-to-1. Maybe it's a 5 or 6-to-1. This may give me the same, unless it's right to the extreme with a stop above, and maybe I could double what was here of risk reward. So you have a minimum of 5-to-1. Or any of these levels, you could just wait on a lower time frame, right down to a 1 minute if necessary, to get a very low risk, high reward trade set up to here. If you do that with confirmations, there are chances that you might have a couple of stop outs. It's just the way it works. If you reduce your time frame, you're going to reduce your pip size in that area. You're not at the extreme. There is a chance that you will have more stop outs. That's just part of trading, and that's down to advanced and experienced trader, whether you want to do that. Once a valid B pattern has formed, just like over here as well, Then basically we reset and repeat. We're looking for opportunities. Reset your brain to look for opportunities. Not just think we're in a downtrend, I'm just going to short here and hold it for the next 2 days and it's being a 60-minute chart. Just think of it as opportunities. So when price drops from here and comes up and we've had an entry like in this area and we've had a target here, and then you think, fucking hell, look, price has gone twice as far. I should have held it. Nothing wrong with trying to manage it aggressively in these target areas. Manage it aggressively for price to drop. Nothing wrong with that. And then you're into bonus areas, like going into trade number 2 for free. And then price comes back. I've got the entry of a trend line pattern. And normally, if you look to the left, like I said, here on the lower time frame will be some kind of fresh and original level for a set and forget, or you wait for price to roll over and get on board this downtrend using a 1-minute chart in this area. Remember, price could drop, come back up a bit, and then continue lower. So there is a chance, a higher chance of being stopped out. So your win-loss ratio is reduced if you drop down lower time frames. So that's where the skill comes in. So I'm going to talk about these trend line breaks, because what that creates is a flip zone. And what is a flip zone? When a trend line breaks or supply demand is taken out after a trend line break, you're creating a flip zone of what was demand becomes supply, or what is supply becomes demand. You can look at that as support and resistance. These zones are where support and resistance, but we're not looking at the support or resistance up here or below. We're looking at the whole zone area, because there is some kind of supply and demand imbalance taking place on a bigger picture. So following this supply and demand methodology increases your probabilities, which is your win-loss ratio, because you're looking only for the areas of flip zones. And that will also help you increase your reward as well, because we're also being able to drop down to lower time frames in these areas to reduce our risk and increase our reward. So what was supply becomes demand. This is what creates the well-known double tops and double bottoms, and also the head and shoulder patterns. And there can be a pause in the market, so sometimes other influence comes in and these patterns don't work, and this is why we step back and look for a new opportunity. So we want to focus on the correct areas of supply and demand to increase our opportunities, our odds, and the trade working, and allowing a chance to increase the reward to risk ratio. So we really want to focus on that minimum 5-to-1. I cannot emphasize that enough. Let's just have a look at chart patterns, because they're all formed following the ABE flip zones. Maybe not as clean, but these are general chart patterns. So if we just take a little look, we just got a range here, a wedge, ascending wedge, because price is moving up. The reverse would be a descending wedge. Bit of a flag pattern here, strong rally, coming to some flag pattern, trend lines are changing. Then there's a break and there's a move up. Over here we've got a double top and a triple top. You know, we've seen those before. Price could reverse lower, could continue higher. In this case, we've got a head and shoulders here with the neckline here, a break and then a break above. And this one, we've got a head and shoulders. There is a neckline here, but this is the break of that ABE pattern. And therefore, we've got a nice trend to the downside. Now, let's just look at those in a new light now. Let's just apply the trend ABE pattern. Now, this is a trend, but it's a sideways trend, okay? The reason it's a trend, because a trend is something, you think about what the word trend means. It's what's going on lately. You know, what the new fashion is, what's going on lately. You know, what was old trend is not the new trend. This is the new trend sideways. This is a pattern. This is a wedge trend. This is think of them all as a trend. Don't think of them as trending up and trending down. Think of them all as an ABE trend. So if price moves sideways, we've got an A, a B, and this would be the first touch. If this is the new pattern, E. The same for below, A, B, E. If we see this happen, and we start to draw the pattern, as soon as we've had an A, a B, and an E is an entry, A, B, and an E. Does it mean I'll trade this pattern? No, but I want you to understand how they're actually being drawn, and then once they're broken, why the probability of trading these patterns becomes lower and lower on any pattern, whether it's trending up, trending sideways, or trending as a pattern. ABE, this is just a kind of version of this with a range bound top, ABE. Any of these E's are trading opportunities. If there is a risk reward between these gaps, even here, if there is a risk reward of more than 5 to 1, there's nothing wrong with taking it as an opportunity. Okay, this is the flag pattern. We've had an A, a B, but nothing happened. We didn't have a pullback. Then we got a new A, B, E. And if you look down, because it's a channel, and if the channel's drawing nicely, you've got the A, B, E. But I wouldn't be buying against the direction of balance. Okay, the scales tip downwards, so I'm not going to buy a channel low. Okay, they could be into a higher time frame area to the left, that's different, but not in this. It's the higher time frame. And then when we broke above, A, B, and this would be E. So you can see all the E's are the entry areas, but as I go through the patterns, this is going to make a little bit more sense with the supply and demand balance, imbalance. This is what's important when you understand this. So if we take the triple top here, we've got A, B, entry, could make a trade. This might continue higher and still fail. We'll get stopped out and break even. So A, B, E, entry, failed. So all we've got is this A, B, E, and that is it. I've got nothing else to declare. I'm not going to do an A, B, E down here. It's a downward movement. I don't need it. Let's have a look at this head and shoulders. A, B, enter. Started to work, oh, then failed. Either broke even or stopped me out. For me, I just take my stops. A, B has been drawn. Now we've broken the trend line. Okay, we've got a flip zone. Remember, every time trend lines are broken, we have flip zones. So my flipping bias is to short. So I've got A, B, E. Fuck it, it failed again. And then I've got to wait and draw the next pattern. You know, it's failed. Maybe a double bottom here. But what's happened, it's failed both here and here at the ABE patterns. What that's telling me is there is a balance of supply and demand in here. This isn't a range-bound market, but it's telling me this equation is happening somewhere in here. So not only is this a flip zone, but so is this. So this is to go short, this is to go long, and that means if I short here, the chances are this kind of scenario is going to happen where once you're in a trade, you've bought from here, it only moves up a little bit and drops. It's already told me the trade hasn't worked. There's a chance it's rolling over, then this trade hasn't worked. So therefore, there is something going on in the equation of supply and demand. Just let that settle, find other opportunities. It's going to happen all over the place. This is what you've got to cipher out. This is probably one of the most important things you're going to be looking for. So let's have a look at the head and shoulders, but with a continuation. A, B, E, failed, broke, flip in supply and demand balance. A, B, enter, and it worked and reached the target and some. Now let's look at the breaks of these, because this is exactly what I want to get through, is the two ways to look at these areas, the flip zones and the A and B E patterns. So the break of the trend lines create that flip zone. The A and B pattern builds after that, if price decides to range or drop, or go up, depending on whether you're flipping to the upside or the downside. So let's have a look at, there's no really flip zones in these are just the patterns, but until they break out. Okay, if this broke up, then we're looking at a flip of pulling back somewhere, maybe to this trend line again. Bearing in mind though, it's not going to be an E entry, so I'm looking for price to create a new uptrend. So we've got, let's have a look at this one. A, B, there would be an entry here if we pushed higher. Okay, there is no, on this pattern so far, since we didn't make a higher high, there is no pattern. You know, this is the pattern. Once we pull back, we need to make and follow the pattern to draw the A and B in. So we only make a B if it's a high high. Until we start creating this or this inside, then we can start to draw the pattern. So now we've broken that trend line, this initial trend line. There's the flip zone. This is supply in control, but price might not have come back and touched it and dropped lower. So now we can draw the A, B pattern here. Okay, when we made a low here, we can draw A, B, but we never pull back for an entry. And then price continues lower and breaks this trend line, creating a flip zone area. This is the demand. Price could come all the way back down as well to this area. I should have also highlighted here. But we've got this flip zone, and where price breaks here, if we've got that rally base rally, there's a high probability of working in these areas. If there is a lower time frame, which I spoke before on the previous slides, supply level in here that's fresh and original, I might have a set and forget. But other than that, you see the flip, we've got A, B, and this will be my next area to enter. If we come back to exactly the same of the previous slide, this is exactly the same setups here, triple top, break the trend line, there we go, ready for a double top from the scenario of the break. So we've got an ABE pattern and a double top pattern formed because of the break of the trend line. So it's a combination of two there, it gives you a bit more confluence. This one, we broke this trend line, created this a failed trade to the upside, would have been a flip zone. So price has dropped, but as it's coming into this flip zone, we've created another flip zone because we've broken that trend line. This is now the pattern that I was talking about of the supply and demand balance in these areas. Could you trade between here? You could, but because of the big picture, and this is looking not very clean, it's not looking like this yet. Do I want to do that? No, but what am I going to be looking for? I could jump over here. This is that move up here. The A, B, B. Yeah, because we'll be drawing a trend line along here. You could even maybe class this then as a and B. So A at the bottom. Yeah, B, B. Enter on whatever pattern is drawn here or this range. Enter down here, and then we'll leave it alone. Let's have a look at the head and shoulders that work to the downside. So we broke here, becomes a flip zone right at this break as well, especially if there's a higher time frame drop base drop. It's a very strong setup, and that's kind of what I want to be looking for. If you start looking to the left here before we've had an AB setup, or it's not into a higher time frame level and you're looking for a lower time frame, yes, it can work. Advanced traders, we can do that, but we don't take them all, and they have to be exceptional, like very strong impulse candles down, small level, like on a 30-minute if this was a 4-hour chart, and then a strong drop. So we can look in here, but the idea is to concentrate on the big picture. This is the flip zone area. Price may turn in here. It's a high probability to look for any kind of levels, but to keep it nice and rule-based and safe, use the higher time frame for your levels when you're starting to learn this. And then once we've gone away, we've got a pullback to here. It's an E leaning on the trend line. Now I can start to look for lower time frame levels in here for a lot more confluence. Now there's a third setup outside of chart patterns, ranges, trends, and breaks of those ranges. It's the springboard setup that I look for. And what is a springboard setup? If I've got a higher time frame with momentum, so we've got a very steep trend line, almost no pullbacks like rally base, or little pullbacks, but they're so strong. The trend lines that you normally draw are not like this angle, they're like this, but it tells me we're in a momentum. You can just keep playing this as long as you get this springboard setup. And what is a springboard setup? It's exactly the same as in the break of the previous slides, except it's got momentum to it, so you get a different pattern. And what you'll find is you'll have this uptrend like this. You might get in some trades, some opportunities, you might not. You'll get a break of the momentum to the upside, maybe multiple breaks of different trend lines, and then you start to create some kind of wedge range or ascending wedge, descending wedge kind of pattern, even a channel like a flag. This is the flip zone that's going to be creating for the pullback. Okay, it's in the making. When price breaks this gentle, so this is the steep trend line, these are your average ones coming up, and then you get a very gentle break. I'm looking for price to retrace back, ideally at the trend line touch, but it doesn't always happen like that. It might turn sooner. If you've got a little rally, base, rally, think of the base as your springboard as well. So you could get on board with the touch of this back of the trend line, even if it's not into a level. That's why I'm using this as a springboard setup. You have to be in some kind of level, but if it's not and it reacts from here and I'm on a lower time frame, then I know my entry is going to be on the candle break up, my stop's going to be below the lowest low of those candles, and I've got a very low risk on a small time frame, and my targets are always up here. The best scenario would be something like this. Same pattern again, but this time when we break, this is a little bit more shallow. This whole area is the springboard area. We've got the level down here. Ideally, price would just bounce off of that trend line. So I'm using a trend line as a springboard, only in higher time frame momentum markets, and you get this kind of pattern on a lower time frame. So I've got at the end of this slide again the patterns to print out, so at least you can spot these setups, because this is what you should be looking for and learning from. Just before I continue again, if you haven't, because you wasn't sure, it's your first time watching my videos and you don't really know me, this content, like I said, is completely free, nothing I hold back. So just spare a second to hit the subscribe, give us a thumbs up, and don't forget to comment if you like, the notification bell, and there's my Facebook page, www.facebook.com/TyroneTrading/ where I post some trade setups time to time. I don't post everything, I can't, I'm busy, I've got multiple incomes. I don't trade short term, I tend to go for longer term trades, but I do post now and then for some setups. I could be posting all the ones that are not working, I could be posting all the ones that are working, and a mix of both. It's just the way trading is, you know, I'm not there to post everything. Well, let's look at the live charts now as examples of trades and setups that I posted before the actual markets made a move. Now on the left here we've got the dollar yen, and on the right we've got the dollar Swiss. Two similar scenarios, okay, happening probably at the same time. Looking at the dates, let's have a look, the 6th and the 6th to the 7th. Yeah, kind of similar times. The timing might have been slightly different. This may have happened a few hours before this one, etc. But the patterns are the same. You see the pattern. First of all, there's been a breakdown here of this 60-minute momentum or trend to the downside, and the same over here, but a lot more steeper. What I want you to notice is we did have an A and a B, but the trend line would have been coming out here. Okay, so once price had pushed higher and created a new higher high here all the way up, I had A, B, and this would have been my entry, not this, sorry, on this pullback, my entry set up right here. This is a nice, fresh and original 60-minute demand. Fresh and original, quick tip. Fresh is something where price has not been back, this wick hadn't touched it, and original means when we look, not cutting through candles to the left, there is no level here to create this. Okay, so fresh is when price hasn't touched it. Original will always stay original no matter how many times price touches it until it's broken. Non-original levels are levels like this level, which are created from this level. This is a fresh and original level. This level just touched the wick here, so it's debatable whether this is original. You know, it's not clean. Now you notice as well on here we didn't quite touch the trend line. Okay, so you would, if you would have had a risk down in this area, set and forget for 5 to 1, you would have missed the trade. If you would have, when watching a 1 minute chart, you might have took a gamble here and you might have got a 5 to 1, or you might have been stopped out multiple times. This is where the novice trader goes wrong. He'll take about 4 or 5 losses in here. Trade doesn't work, or the trade does work and they fucking lost and they've not been in on the winner. And that is what I want you to understand, to stay out of. You must not keep taking. Have a minimum 2 losses and not trading it. Find another opportunity. Wait another day. Reset yourself. Yeah, reset and then search for a new opportunity. Now this one, swing bottom A, B, and here we have come back into an original, but not fresh. When they're not fresh, because of this wick just here, this wick touching the level has gone away, but we've come back. It's a nice E entry. I can take it. Doesn't matter if it's not fresh. It's an original level. I've got to set and forget, but it's going to be quite deep anyway. In this case, as long as my entry is going to be in line or above where the trend line is at the time price is, then I know that I'm going to get a solid entry. If price wants to touch that trend line, it does. If my stop would be below, I might have had a 5 to 1. I might not have. I might have had to wait for a confirmation in that area. Then the good thing about the confluences of the trend lines and flip zones and stuff like that is if price does start to come below this, it's debatable whether you want to trade or not after that. If I'm not in a trade and price has already come down afterwards, I'm not going to take the trade. This is another example of an ABE pattern. This is the Euro Swiss daily. This is the Euro Swiss 240 in that area. A, B, And this is pulling back to that E scenario. Now look, it's clean. There's no level in here. These are the levels. It's conventional supply and demand, demand, but price might not pull back. If it does, it might be changing direction. So I don't want to be trading those demand levels or supply levels like that. So therefore, I've drilled down on the 240 and found this rally, base, rally. Now this is an original level, this lower one. It is not fresh because price has touched it. But we've got a rally, base, rally. Now if you've ever watched anything on Online Trading Academy or Sam Sidens or Sam Evans and all that talking about this stuff, this is a level on top of a level. This level has eaten into this level a little bit, albeit, but it is a level on top of a level, creating one bigger level. On an 8 hour, this might be all one fresh and original level. And then price come back and touched it, this lower level here, but this whole area, this is a second time really. You can class it as a first or second, but it's been touched. It's not fresh, but it is on a higher time frame ABE pattern. So here I might have waited for confirmation. In fact, I did, because if you look at where my entry is and my stop is not down at this extreme. If I would have had an order here, set and forget, here as an entry, my stop below, I would have had more than a 5 to 1. This, I believe, has given me about a 5 to 1 or 6 to 1 trade. And what has happened, price has dropped in here, and on a lower time frame, I've drilled down and followed this exact same scenario. ABE patterns, a break, a flip board, a springboard or flip zone, or a nice rally base rally, entered, my stop's below that creation because I'm thinking if it comes back, I don't think this level's going to work. So I was quite happy to take my risk. This trade did actually work. If you go through the charts, look at the 17th to the 30th or 4th of January 2021 here. It's quite recent. You can see how that worked out. And you can drop down to the lower time frames yourself. This is another example, trend line break double top setup. I posted this before on my Facebook page to keep an eye out on this, and I would have had a set and forget up in this extreme. I wouldn't have made entry. Price broke the trend line of an ABE setup. Here's my target area, pointed this one out, confirmation trade only if price reaches 240 minutes supply. I will drop down to lower time frame looking for nice uptrend structure to be broken and pullbacks to the lower time frame supply for entry if more than 5 to 1 risk reward. So providing from here, if I got the right structure, to here, I had a 5 to 1. Now the problem is just trading this here, and you could have got stopped out, and then tried again, got stopped out, and then tried again, stopped out, and then took the extreme and got stopped out, and then price breaks higher, or spikes above, causes a fake out, and drops lower. That is what you're going to see over and over again. Do not get discouraged. That's fucking trading. It's your rules in these areas that limit your losses. I have a hard, set, firm rule of no more than 2 losses. So this is why I missed this trade. I wanted it to be deeper. If it's gone deeper here and I've took my risk, the deeper you are thinking about it, the deeper you are taking your risk, the less chance price is going to come back to stop you out. Even if it dwindles here for a few more hours, it will probably spike up, down, looks touch and go, and then they drop. If you try and get in too early, that might drop, come back up, spike up, stop you out, then drop. So this is the point, the closer to the higher time frame, the better it will be for you. So sometimes you might think, you know what, I can get 10 to 1 here, or do I wait for 5 to 1 in this area and be safer? You know, take a little bit bigger 15 pip risk than a 10 pip here. And I know I've got a good safe 5 to 1. There's lots of ways to play this. Let's have a look at this example number 4, trend line break, fresh and original rally base rally on a 15-minute level of demand. Let's have a look at this dollar yen 240 chart. A, B setup here. So if price pulls back later, we've got that E scenario for entry. But what's happened before that? What created this AB pattern? Break of this trend line. This is a break, rally, base, rally, strong rally. So I can take the double bottom. This is a double bottom setup. There is a rally base rally setup. There's a level to lean on here. And there is also, as we break through this little flip zone area that I'm kind of, it's a bit more advanced, but this is that flip zone area because price might not retrace to this level. Okay. Again, I've got this 2 loss gamble. And if I see a really good lower time frame level like this rally, base, rally on the 15, the base rally, When price drops into it, this was the area that I was looking, 6 pip risk here. I didn't make entry on this one. I needed a 6 pip, and it was at 7 pip would have made entry, not 6, 7, because of the spread and the ask price where you're kind of buying. And therefore, it didn't make entry. My stop would have been below here. Price continued higher. There was a little ABE pattern here on the 15-minute confluence. So this is why I wanted it a bit deeper. So my stop by the time we got in is eventually going to be under this trend line and nice and safe. Nice low risk area for a trade that will go to here, because this was the solid bodied candle, the target area on 240. Okay, I didn't know this was going to happen. It was going counter trend on the higher time frame, but this was a very nice little setup that I was looking for that played out. So this is another example on the daily trend line break, creating a double top, and a 240-minute ABE pattern as well. So, you know, like I said, if I'm going to have 2 losses in this area, this would be my double top area. If price decides to retrace, providing we don't have a pullback and a drop, creating an ABE pattern on the daily. Doesn't matter what it does on the lower time frames. On the daily, we've got a strong drop and a double top. This could do a drop, base, drop, base, drop even, and then a strong rally. This is, to me, a double top setup right here. If we create that pivot point where we rally and drop, then we've got an AB setup on the higher time frame. Remember, I'm always looking for 5 to 1, so I map this one out like this. If price retraces, is my target area. I must have a 5 to 1 if I'm going to short this. Now, this was also the 240 after the break of this daily trend line, close below it. We've got an ABE pattern. This turned out to be a bit of a momentum move, by the way. Afterwards, there was no pullback, but this is the area. It would be into the actual level, the mess that's been created here, if price pulled back. And I would have probably looked for a bit of a confirmation because of the fact that we could have retraced up into the daily area. So that was the AB. This is that daily area. This is the area that the flip zone is, break. This level was in a flip zone as well, where the break is. AB, there's lots of confluence, and this moved very strong because there was a huge supply-demand imbalance in that area. Right, example number 6. This is momentum flip zone daily 230 springboard setup. What I'm looking for is momentum moves. Momentum moves will give you like rally-based rallies, and springboard setups tend to appear then. But before we go into that, I want to just break down this New Zealand dollar daily. This is a 240. We'll go into lower time frames because I'm breaking this down into two slides. There was initially a strong trend line here. This was the nearest main pivot point since we pushed higher. These are all rally-based rallies, momentum. Lots of springboard trades like this over here. But what I would have done is drawn here a trend line initially, and we would have had a double top scenario. If we pull back into it, I would have been looking to short. Okay, price broke higher. This is a flip zone as well. What was supply becomes demand, because it shows me that it creates a demand level. So bearing all that in mind, since we pushed higher on a rally-based rally, there was a little flip zone springboard area down here as well. But we've got this A, B, and point here for an entry on the E. Okay, and this area is actually in play right now. It is this lower level, this trend line here, which is this A, B. So it's E, and there's the one up here. This is the springboard set up on a 240 minute. What was happening in this area, what was supply became demand area, was this. A, B, lower low, a pullback for an entry, actually to go for a target here. Just because this is up, the opportunity to short this was potential for a target here. A, B, in, drop, and it broke. So therefore, the ABE setup has been broken. What was a supply area becomes demand. So we've got this little drop base, almost a rally base, rally area of demand, where we have this trend line coming through the springboard. But what I found is a nice 15-minute fresh and original level inside the flip zone with springboard support area right here. Not the cleanest one because the springboard is lower, but if it isn't going to work now, then maybe it's not going to be working at all. The downside, we broke a trend line, but not an ABE trend line, just a trend line. This is a momentum trend line, so valid 240-minute candle closes below this trend line, okay, because it is a momentum trend line. This is the momentum, okay. There was no real trend line on the daily. It's a daily area. It's a momentum trend line, but it's got multiple touches on the 240. I will manage this aggressively on a 15-minute due to the 240 ABE pattern setup, because I still want my target up here. There's a high chance it still reach here, but there is a setup to short here, which means if I enter and price rallies up here, it might come all the way down again for either breaking lower or reversing higher, and I don't want to have that frustration. So if it gets up here, whatever smaller time frame in this area, I will manage it aggressively. If we move on to the smaller time frames, you'll start to see how I drilled down the area to put my set and forget. And it was a very nice bounce out of this, by the way. It didn't work, this trade. Okay, I had to buy lower, and I still don't know if that one's going to work. I think that one is current right now. So we got this little drop base rally, and there's a little base here, rally, strong rally. Notice the big, clean impulse candles out of this area. So this was what brought me to this attention. Nice 30-minute fresh and original demand. The trend line should be a little bit lower about here, so it was kind of a trend line confluence, but mainly the springboard were above that area. And my target was up here. 15-minute level, you can see much cleaner. Rally, base, rally. So when price had come into that level, it reacted. It was a set and forget, and eventually this failed, and I took a loss. So another example, number 7, dollar yen daily and 240 setup. It's broken this daily trend line. I was looking for shorts in this area, by the way, trend line confluence, and I got stopped out only once, and then price rallied higher. In fact, there was a flip in supply and demand. There's no setup. I had to let price play out until we had this pullback into this rally base rally, fresh and original demand level. ABE entry. This would have been an entry right here. If you look at the trend line as well, it kind of stuck on the other side of the trend line, but I'd have been watching for lower time frame setups so I get a lower risk, because price didn't drop deep enough. It touched the trend line, barely touched it, and then rocketed to the target, which was here. So that was an AB entry at the flip zone. You see where the location is. So I've built a bit of a pattern, so you can start to write, if you want extra rules to this, just to make sure you're looking for quality setups, but you're going to be scanning and scouring quite hard to find more setups if you're being very strict with your rules. So let's just summarize before I go into the last slides. The patterns are the same regardless of the time frame as a 1 minute and a monthly. The only difference is on a lower time frame, you're going to definitely have a lower reward to risk, unless you can really drop that down to 1 or 2 pips, which is pretty much the spread and an entry. It's going to be very difficult to do that. But on a lower time frame, you can get some early warning sign when to start to buy, so you can reduce your risk that way. Nothing wrong with that. That's what I encourage. But you can understand now, it's not about how long you're in it, how many pips you make. It's about the opportunity, the reward to risk, and these areas, because you could make plenty of trades hitting 5 to 1s quite often, even 10 to 1s, than being in a trend trade that lasts two months where you've only made a 5 to 1 because your risk was very big. You know, the actual pip size was very big. So apply both to high and low time for confirmation trades as well. These can just be confirmation setups at these areas, especially on the lower time frames. Advanced supply and demand traders can drill down to low time frames to look for them counter trend levels that I've showed as well inside the higher time frame supply and demand, because it's the higher time frame patterns that are key for the location. This lower time frame will help you reduce that risk and increase your reward and increase your loss, by the way, but you know, that's trading. Newbie traders can identify where to trade following these patterns and practice looking for supply and demand levels, both trend and counter trend, inside the higher time frame zones. Also wait for lower time frame confirmation to create both the ABE patterns, or the double bottoms and tops, the head and shoulders, etc. And this can reduce your risk and increase your reward confidently. It's a nice slow way of learning and drawing off these zones before taking them. It's not about trend, it's about opportunity. Remember that, okay? It's about opportunity. It's not about which way the market's going, it's about opportunity. Risk-reward ratio opens up opportunity, not the trend. There are opportunities on all time frames and all pairs in all markets any market that you trade, every single minute, hour, day, week, and year. Okay, you just have to practice finding them. Apply the 5-to-1 R&R. That will keep them day traders from getting into too much trouble, and build confidence on trading them. Now, if you want, you can. I've got the link below where you can just download this. Not the cleanest because I had to shrink the sizes, but you could put this next to your computer so you've got an idea of the patterns. Now, all you've got to do is invert this to have an inverse correlation. It's for shorting. The patterns are the same whether you're looking to short or go long. I've not put them all here, but the little key to the right here, just to remind you, 5%, 5-to-1, 5-to-1. Okay, go for more if you can. Always try and aim in them areas of 5-to-1 to get a 6-to-1, a 7-to-1. But you might find you miss trades if you try to be too strict, and you'll have more stops as well on the lower time frames if you try to be too strict. It is down to really down to skill, but based on these patterns. So that is it. I ain't going to chat no more. It's a very long video. Please, again, if you like the content, subscribe, hit that thumbs up. YouTube, this is all free, and the reason why is because I've pointed this out in the past, but I don't like to keep going on about it. If people are selling you something, they're not normally making a living from trading, okay? And I don't believe most traders make a living from trading anyway. They've got a couple of jobs. And if they're trying to make more money from you guys, then they're not making enough money trading, okay? I am confident enough to let you know everything that I do, because I make money from my taxi business. I even drive still as a taxi driver, so I can earn extra money. My wife's making a bath bomb business. She's had a candle business for a few years now, candlemaid.com. MAID. You can have a look at wholesale bath bomb business. I've got passive income. I trade in the stock markets now, only this year, very small. And this is kind of like another little passive income. I don't need to make money from you guys, and that's what you've got to be aware of. So think about it before someone's charging, especially if they're only making 1 or 2-to-1 trades. This is where the majority retail traders fail. Anything less than a 5-to-1, you're asking for trouble. That's just my professional opinion. Take it, leave it, even disagree with me, it's fine. We're all traders helping traders. I just want to really help you guys. So have a wonderful day, safe trading year, and a profitable one too. And maybe we can all meet up one day for a drink in all these different countries talking about our trading stories. Take care. Safe trading.